Angela Stevens with the Hatch Homes Group.
And Michelle Dacombe, and it's time for a summer market update. This time we are focusing directly on investors.
Yes, in the past 12 months, we've definitely helped a lot of clients either sell a home and reinvest, or as a first-time home buyer does, they make that leap to buy their first investment in real estate, or even if you have a lot of equity in your home, taking it out and being a first-time landlord. And we are actually right now at my investment property, which is a duplex that I purchased a few months ago, and I have been working really hard to fix it up and rehab it, and I am so excited to share the final results with you when it's ready.
It's so cute. Yeah, so let's be clear, it is definitely still a seller's market. However, there are three key market indicators that we want to focus on and really talk about right now. The first one, of course, is inventory, because that is directly correlated to price, and most important, how we track the state of the market. So we've noticed in the past couple of years that the first part of the year we see a lot less inventory and prices tend to increase and get a little bit high. As the second part of the year approaches, we start seeing a lot more, or just even a little bit more in inventory, and then the prices start to decrease a little. In fact, just last week we saw almost 40% of all listings that are active on the market right now have a price reduction. That's pretty big. And that is just creating a lot more inventory for our buyers to choose from. And also it's a little bit less competition for you, which is great.
Yeah, so I mean, it's still a strong seller's market. However, it just gets a little less pressure on a buyer, a little more opportunity for buyers, which is
just
fantastic.
a slight uptick in inventory.
Yeah, so the second indicator we're looking at is, well, the rental market. So it's still showing signs of being of a promising future. So I know that in my neighborhood, and Michelle's neighborhood for sure, there is new construction apartment complexes just popping up everywhere. And if you look, actually, you know, that could be concerning, like, oh, are we flooding the market? Well, first of all, we need rent, we need housing. But if you look at what the permits are being pulled on the city of Portland for new construction apartment complexes, way less in the future. So a lot less. So it's just a little bit of a boom right now. I don't think it's going to be like oversaturated. At least it's not looking like that. So the third indicator that we're looking at, of course, is interest rates. When I bought this property, interest rates had just ticked up slightly, and just that little increase really affected how I had to look at my numbers, you know, what my monthly payment was going to be and how much I could rent it for. Were two things that I was really focused on. And as you know, as an investment property, you're going to pay a little bit higher interest rates. So you want to know your break-even point. What is going to be worth it? And I say, right now, since it's so close, since the break-even point could be so close right now, if you're interested, do it now.
Now is the time before they go up again.
Yes.
Yeah, so in conclusion, I just wanted to share real quick a study that was released from the Multiple Listing Service, I think a couple months ago, and it was tracking the 5-year trend on home equity increase. And in that 5 years, they discovered that on average, the homeowner increased their equity by $121,000. That's effectively adding a whole new income to the household. And wouldn't you want that? Seems great.
Yeah, and we might not see, you know, that much of an increase in the next 5 years. It might take 10 years to get there. However,
don't you want a piece of that?
Yeah.
Yeah.
So if you are interested in talking to us further, if you want to know more about investment, no matter what kind they are, we would love to talk. Call us, email us,
text us.
We're ready.
We're here. Thank you so much for watching. Please share.